In this video, we're going to look at exiting a breakout trade within a trend environment. Stay tuned. Hey traders, a very warm welcome to you. Okay, so a breakout trade. Let's just differentiate now between trading a breakout within a trend and a breakout within a kind of short-term scalping situation. Short-term scalping situation might be in a range and we're trading a breakout. A little bit different. I'm talking about specifically in this video, a trend we've got on board, and now we want to kind of measure how far we're going to let this run after the breakout scenario. So let me put this example to you. You may have been in this situation yourself. I know I have many times before. Trending market has pulled back. You have bought for whatever reason here. Let's say it's 50% retracement, 33, whatever. I've even got a little inverse head and shoulders there, not even intentionally. But you've bought on this pullback on this market. It's an uptrend, pushing nicely. You're in the trade. Now, you're coming up to that so important level psychologically as well as from a price action perspective of the prior high. Now that might be 52-week high, all-time high, or it might be, a really serious, significant high. Again, we're not talking about something very tight within a range here and that might not work. We're talking about, hey, I want a trend trade. I've bought a pullback like a good boy or girl that you should do in these trends. And then you want to kind of hold this and let the market pay you for being right. So how do you try to ride it as much as you can? Now, what you can do if you're feeling concerned about this is always scale. I'm not saying always, but you can always scale some as it pushes towards the high, because very often markets do fail at prior highs. They do a little bit of hanging around, they reverse a little bit. So if you feel like you might end up closing the whole position, purely from a mindset and psychological perspective, take some off the table there, by all means. Is it the most efficient thing to do? Probably not, but who cares? If it keeps you in the trade with the bulk of it, which is what we're trying to do, then by all means, take a little bit profit off the table so you feel more comfortable. However, we're assuming now that we're either holding the whole position or we have the bulk of the position and we're looking for a point where we're going to exit it. Okay, the first option we have is price action. So what can happen? We can push through here. In fact, let's use a different color pen. Let's go with good old orange here. We could push through and we could pull back here. Now, that's all very well and good, and you should expect that from a trend. And this is an important thing, guys, from a psychological perspective, is that, as we push through this kind of level here, expect it to pull back. Occasionally, it's perfect. It just blast off into the stratosphere, you're all good. But expect the pullback and say, hey, I just want to see how it behaves. So price action, let me just see, is pulling back. Resistance now becomes support. Will this hold? Allow it a little bit of noise, because there's going to be a few players who have got in on this breakout and are going to be really having their stop too tight. So give it a little bit of noise and then see what happens. This is the kind of pivot area you want to look at. If it then continues, pushes back up, you're off. You can hold it and you can look for a further move. We'll talk about that in a second. But that initial kind of period where you're very concerned perhaps that it might not break through that high, or how will it behave at that high, let that settle. Maybe you can kind of be aware that, hey, I might have to give back a lot because I don't want to pull my stop up too soon. But this is kind of the sort of action that I might get at highs. So price action, seeing if the resistance turns into support is the first thing. The second one we've got is, let me clear some of that off for us. And let's go back to black. Maybe it's a little bit clearer on the camera. All right, so we have now, how do we exit this completely? So assuming that we break through and we push nicely, a good place to exit or to scale some, again, you might have a longer term thesis. We don't want to come out straight away, but a good place to get involved in this, or to get involved with your exit, should I say, is on exhaustion or a spike. What do I mean by that? So we're looking for a big high volume bar combined with a good move in one day. So that might be, if we're talking about a daily chart, nice big range on the day. If we're talking about a 15-minute or an hour chart, again, nice big range, good volume. Just really the real kind of final push and scale some into that. Or look to see what happens the next day and drag your stop up on that one day's action. Let me explain what I mean by that very quickly. So let's say we have had a big bar on that day, and this is our daily candle here. These scales are wrong, but you get the point. You could then, if you say, hey, you know what, I want to come out on an exhaustion or a spike, but I don't want to, how do I time it? you can always do a retracement of that candle. So you can always say, hey, you know what, 50% now, I'm going to lock in gains and I'm going to have a 50% of the daily range trading stop exit. So you've kind of timed it right down now. You know you're going to come out on the exhaustion spike and you say, you know what, how far this goes today, I don't care. It's still going, still going. You're ratcheting your stop up, ratcheting your stop up. If it closes at highs, you leave the stop for the next day. See if you get 2 or 3 days follow through, but you're still locking in that exhaustion or spike price action after you've had the breakout. So you're not giving too much back. Of course, the chances of it coming back to pinging you out and carrying on are still there. But the point is, if your plan is to come out on an exhaustion spike, you know, rather than trying to be time it, which is quite challenging, like where do I come out, what do I do, how do I get involved in the exit here? Just put a process in place that's really on the short term, so on the daily or whatever candle this is, and have this trading stop on that day, if that makes sense. All right. Next one we've got is fixed levels. So we can use fib like the 38.2, 50, 61.8, the common ones. What does that mean? It means that we can extrapolate and extend out the extension and say to ourselves, okay, so the move here, and by the way, your chart tool will do this for you. You can say, okay, well, 38.2% on top of the breakout level is here, whatever it is, and it's going to be based on the trend that you've captured already. That's my exit, or 50% of the move. So that's our 50, give or take, and we say, okay, there's 50% of the move again. It's going to do half again on top of the breakout. There's my exit there. So you can use that as a tool, and you know, fib. You can use fib. You can use 25%, quadrants, thirds, whatever. My take on this is, you don't need to be too strict with it. Just perhaps look at what has happened with the trend itself before. Has fib kind of worked, or has it been more split into quadrants? Has it been more thirds? And adjust it to suit. Or if you're very stuck with something and you want to stick with that plan, by all means, you know, have flexibility or stick to it. I don't think it matters. The point is, if you frame the trade, it's going to make it easier for you. So extensions, good place to scale out of a trade if you want. Now, of course, if your thesis is for a much larger move, you're not going to be wanting to take 38.2. You're not going to be wanting to take 50. You might even want to go broader and broader and broader. Although you may say, okay, you know what? Once we break these levels, then I'm going to look to actually maybe lock in some gains and stuff. So you can play around with it. That's the beauty of trading. You can add these foundational rules, but then tweak and adjust it depending on, hey, how good is this? You know, are we coming off our lows? Are we is this a big trend that's changing in a commodity, or is it just a breakout thing? What is it? You know, what's caused this? How much mileage do I think it's got? And adjusting these to suit. All right, let's go to number 3. Pretty standard one, guys. Moving average or percentage trail. We all know about moving average. I've done a video on this before. We can use a moving average whatever period we want and trail up behind it. I'm not so interested in that. More interested in percentage trail. I quite like this idea because, you know, rather than you scaling out of this, you allow the market to take you out. Now, this is going to give back profits. There's no doubt about it. That's just what's going to happen. However, if for whatever reason you think this is the start of a monster trend, you've got to be prepared to give back profits. That's the game of the game. That's the scale. If you're prepared to give back some profit, then you could sit on this monster trend for many years or many months or whatever time frame you're looking at. If you're not prepared to give back profit, yes, you might get out and get a nice profit on it, but you're going to miss the big monster move. So that's the decision, a commercial decision you've got to make for your trading business or your trade. So one thing you could do is percentage trail. What does that actually mean? You could say, okay, if we pull back 50% from the high, 40% from the high, whatever it is, or perhaps you can even be one step cleverer than that and say, what was the last pullback? All right, that was 38%. I'm going to have a 42% from high pullback stop. And then all you're doing is you're just ratcheting your stop as the market goes up. You're just moving up, moving up, moving up. And that is a 42% retracement from high, or use a fib if you want, whatever it may be. Now that is a good tactic to try and stay on board a longer term trend. Obviously, the tighter that is, the less profit you're going to give back, but the more likely is that you might just get pinged out on a little bit of noise. The wider it is, the more profit potential you're giving back, but the more chance you've got of getting on board a really, really monster good trend. If you're on the end of a good trend, guys, all I can say is, you know, take it as the gift that it potentially is. You know, if it's a good trend, do everything you can to try and stay on board it and be prepared to give back profits and say, you know what, I'm prepared to give back profits because I could still be in this beast 2, 3, 4 months down the line, years if you're trading that time frame, and it could really pay me for being right for this. Just one little entry that I got here, now is paying me continually for being right. So that's just some ideas of exiting that breakout portion of the trend trade, because I know a lot of people kind of struggle with that. They're in it, they're in a nice pullback, they get to the high and you get a little bit of kind of flirting around price action. You don't really know what to do. There's some ideas of how to frame it and sit tight and sit through that and hopefully be able to get a little bit more juice out of the trade. All right, guys, thumbs up this kind of stuff. And if you haven't subscribed, consider doing so round about here for more videos from me and other traders on this channel. Good trading, take care. I shall see you on the next one. Goodbye.